Hey everyone, welcome to a new video here at Sublime Traders. I'm Logical Orange and today I have a crappy voice, so please excuse me for this. But I needed to make this video in order to show you a strategy that only works in some very precise situations, and now we have it. It basically requires for the price action to be at the end of a formation and to be in a accumulation or distribution phase. Right now we are at the end of a triangle and in a small accumulation, possible accumulation phase, so that basically the price is going sideways at the end of a formation. This strategy, I found it, I saw it at one of my colleagues a very long time ago, and it is a strategy that really has very low drawdown. But as I said, it really needs to have precise conditions in order to be executed. I personally never lost a trade with this strategy because I always waited for the perfect moment in order to apply it. I call the strategy the turtle strategy. I don't know if anyone else calls it that. I didn't invent it by any means. It's a strategy that is extremely simple, but well, nevertheless, some people don't think about it, so I wanted to show it to you. It basically relies on the fact that the price will go on one side or the other, and it's an educated way of saying that I don't know where the hell the price is going at. So we have two possibilities, a long and a short. As you guys can see, the stop losses are overlapping on each other, and we have entries where the previous position stop loss ends. So we have a long that basically will execute once we get to this price level. So I got to these price levels by taking the mean average of the previous fake outs that we had on this descending trend line. And I also took this 55 EMA into account. I just placed the entry right here. Of course, you can place it a bit higher. In this case, you are more safe, but you will lose some profit. And you can also place it a bit lower. And in this case, you are more exposed to risk, but you will get more profit if the breakout will continue to the upside. So if you enter at the lower area, more risk, more reward. If you enter at the higher area, less risk, less reward, of course. Now the stop loss is, of course, based on the trend line, the ascending trend line and legendary line support that we have plotted on the chart. So this is the orange line, and also takes into account the fact that we are in this support area right here, and we have this margin of error that will allow us to invalidate our trade if the price goes to the downside. Now this would mean that the price will go up, touch the entry, and then go straight down. Of course, this is possible. However, we are also covered with a short. So the short has the entry at the previous stop loss zone. So if the price decides to go down, exit the formation in a bearish manner, we have an order waiting for it, and we will execute a short, and we will have multiple take profits on it, of course. Like we have the Fibonacci retracement placed here, so we can have an idea of on the levels. We can also go on the daily and check other important areas. Like we have here, for example, this would be a good take profit level. Any pivot you can find along the way would be a good take profit, and of course the larger trend lines that are plotted on the weekly that will give us a very broad view of the supports and resistances that are now in play. So extremely simple, slow strategy called the turtle strategy. We also have a book on our drive about something that is really similar. It's also called the turtle strategy. It has some differences, but pretty much in line with what I have said. Now, I previously said in the beginning of this video that I don't know where the price is going, and I'm not kidding. I would be lying if I said I would, but I have an opinion, and that opinion is based on this wave formation right here that you can see, and we can even plot a line that would help us make a projection on the time and the volume that we might have if we go on the upside. So the waves right now are formed in a bullish manner. This is a very good entry right here, and as you saw in previous videos, we can get the time estimate of the move, the whole move, if we trace another line. So we will trace another horizontal line this time that will be a mean value of the previous tops, so the previous wave tops right here, and now we can measure. So let's say we enter, this is just in theory because we have another plan. So let's say we enter here, we will measure. Let me get the measure tool. So we'll measure how much it would take us to reach a similar top. So it would possibly take us around 16 days to get to the mean average of the waves that we previously had. 16 days. Well, sometimes this measure doesn't work correctly, especially when the volatility is low. So take this with a grain of salt. I just wanted to show you again how this works, how you can measure potential time frames, time related trades, especially for those that like to scalp. This is very important information. In 15 minutes, in the 15 minutes chart, this can help you a lot and can help you exit the trades that are not winning by just placing a time stop loss. So you know that in 1 hour your trade is invalidated if a target is not met, or if the price is just hanging around entry. You close, you wait, and you move on, you know. So slightly bullish because of this wave formation right here. I don't have any other technical indicators or formations that would help me decide whether we are bullish or bearish. This is the only thing that is pretty much pertinent right now. And that's why I think that this turtle formation is very good. The turtle strategy is very good right now, and you should apply it. So now you know how to do it. Of course, if you have questions, write to me on the chat, on private message. Don't hesitate to ask if you don't understand. This is why I'm here. This is all for this video, guys. Thank you for watching, and see you on the next one.